Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a quick look at the Forex market after the FOMC kept rates unchanged, but surprised the market a little bit to the downside by lowering their end-of-year Fed funds target to 4.6%, down 50 basis points from 5.1% in September. The market was expecting somewhere around 4.9%, so that is more in that favor, and that sent the U.S. dollar to the downside. So let's take a look at some of the major currency pairs. All right, for the euro versus U.S. dollar, looking at the hourly chart, the price moved sharply to the upside, extending above the 200-hour moving average and also above the 200-day moving average. Those were our next targets on the top side that we needed to get to and through. Recall from trading yesterday, the price did move up to that 200-day moving average and then move to the downside. And right here, the price moved up toward that level, but found more sellers against the 100-hour moving average before moving to the downside. So breaking above the 200-day moving average, and I might add the 38.2% retracement is something more positive for this currency pair, something more bullish. We like to see the price move above the 38.2% retracement. So what it says to me as far as risk goes is that we'd want to probably see the price stay above the 200-day moving average. Now, there's a lot of volatility. We still have Fed chair comments to go, and a lot of time has to go before he starts his speech and so on and so forth. So we could see sellers enter the market and push the price back down below that level. But once broken, we want to get back above that level if we do go below it in fairly short order. So be aware of the 200-day moving average as a key pivot for the euro versus U.S. dollar. Let's take a look at the dollar versus yen next, and this is the 4-hour chart. And as you can see, the price is moving below the target floor area through here that we had outlined in our morning kickstart video. This is, again, the 4-hour chart, and you can see how the market found support buyers there, found support buyers there, and then found support buyers moving to the upside here. So we fell below it here and then tried to use that level as resistance here, stayed below for a little bit, but then moved above it, and now we're back below that area between 144.39 and 144.54. Now stay below that level is more bearish. If the price can stay below that level, we can see our price move down toward maybe this low right here, which comes in around the 143.24 level in the near to medium term here on the downside for the dollar versus yen. So watch this level as risk now for the dollar versus yen. Let's take a look at the sterling versus U.S. dollar. And again, we'll look at the hourly chart. And like the euro versus U.S. dollar, we're seeing a move to the upside. In this case, we've moved right up to the 200-hour moving average at 1.2586. And stalled. We need to get above that level in order to increase the bullish bias. Also near that level is this swing area between 125.89 and 126.02. Earlier today, the UK, there's some more bearish, some slowing of economic activity in the pound versus U.S. dollar, which sent the price to the downside. But we did find support buyers against a 200-day moving average. So it's sort of like the dollar's weakness is being offset by the pound's weakness, and so finding sellers against the 200-hour moving average is not all that surprising, I guess, and that's something that we're going to watch for. If the price were to go below the 100-hour moving average, I would tilt the bias more to the downside in this currency pair, so be aware of that level as well. Let's take a look at the dollar versus Canada next, and we're seeing the price move to the downside in this currency pair, and in the process break below this floor level that we had outlined in an earlier video. That level comes in at 135.48. That's now a close risk level for the dollar versus Canada. If we stay below this level, there's more that sellers are more in control or in control for this currency pair. You can see the number of times that the price found support against that level over the last 5 or 6 trading days. So breaking below that level is more bearish. The next target comes against a 200-day moving average at 1.3513. Taking a look at the Aussie versus U.S. dollar next. And we'll look at the hourly chart for this currency pair, and it's to move to the upside as risk on sentiment has moved in, and the dollar selling as well. In the process, the price moved above our high target period here at 0.66199 level, and this level is now a risk-defining level for the pair. As long as the price remains above this level, the buyers remain more in control in the Aussie versus U.S. dollar. On the top side, we have all our high prices through here and here as targets on the top side. You might also say, like right here, might be another target to get to and through. So we are pushing up toward that level. We'll see if the price can extend above that level. But the risk now is this old ceiling right through here, where we had a number of different swing highs right there, right there, right there, right there. And we got close to it in trading yesterday, but could not extend to it. And today we're breaking above it right here at the 0.66199 level. Finally, I want to take a look at the New Zealand versus US dollar. And again, on the hourly chart for this pair, we're seeing a run to the upside, and that run to the upside is moving up to our next target against the 0.6191 level. We've reached up toward that level, but are finding some stall so far against that level. We have the swing highs right here, and then became swing lows through here, became swing highs again right through here. So that level is going to be a level that we need to get above and stay above in order to push toward our high price that we saw not this week, but the week before, I think. But in the process, we moved above the 200, 100-hour moving average. All that is more bullish for this currency pair. So there you have it. A run through some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.